Good morning and welcome back to another Market Open. Thank you so much, everyone, for being here. It means the absolute world to me. It is July 3rd, 2023. We are in July, 7 months into the year, and it is 9:21 a.m. Kaladin, Iceman, JJ, Power, Napster, Joseph, Nicholas, Justin, Broccoli Bob, Ahad, Jared, Seth Roth, Sachin, Doug C, Ronald, Roy. Thank you all for being here. Jared, Pete, Jew Jr., Martin Palilda, Philip Rizzo, Paul Goggin. All right. We've got a lot to talk about. Test Cap, Fernando, Rob Menard, Juan, Eeyore was right, Felicia, Tessa, Quarantine Quartet. All right, here we go. Tesla is the biggest news of the day. And the reason Tesla is the biggest news of the day comes as no surprise, is simply because Tesla was able to do what a lot of people have not been able to do, which is deliver these damn cars, especially these EVs. Tesla has delivered 466,000 vehicles. The markets assumed they were only going to be able to deliver about 446,000 vehicles, so they beat by about 20,000 vehicles, which is pretty crazy if you think about that. They produced about 480,000, and they were able to deliver around 466,000, which is obviously just phenomenal, right? This is something that usually doesn't happen. And it's a record high for Tesla. Let me just open up Webull right now so we can all take a look at the stock price and the action that's going on. Now, on news like this, sometimes it tends to drop. It tends to not do as well. But let's see, how it's doing. Adam, I see your comment. Make out the best hair on YouTube. I appreciate you, bro. Hey, man, how you doing? Rajan D. Hey, Rajan, thank you for being here. All right, here we go. This is Tesla. 276 pre-market, so it's up about 14 points, 5.49%. Now, the question here is going to be, can it sustain the rally and the momentum as it continues to get into the market open, or does it get sold off? Personally, I think this is going to rally. I think it does well. Now, could it sell off as easily? Yes, obviously that could happen, but I think it's going to rally. I think the momentum is there. I mean, when you got a company that delivers 466,000 cars in one quarter, it's just, it doesn't seem like there's a massive demand problem going on with Tesla, as some of the others in the community, like Gordon Johnson, seem to say exists. I mean, they produced more cars than they could have even delivered, right? Now it's at 276 pre-market. Now, remember, Tesla was at 279, I believe, in the last time it ran up, and it fell right back down to 252. So this catalyst pushed them back up to the top. We'll see if it continues to remain. I think when they open, this will be close to around an $850 to $860 billion market cap company. So it will be getting up there. And earnings, I believe, will happen in August, to what I understand. Earnings for most like end of July, early August. I know Palantir usually is in August. Tesla's, I think, in either the end of July, early August. So a lot of these companies will be reporting soon. We've got Robinhood at $10.04 pre-market. Enphase 169 pre-market. So back into hopefully getting to the 170. SoFi 836 pre-market. Bitcoin 30,640, kind of unchanged over the weekend, was pretty much flat, but it's still around 30,000. Enovix, we did an entire episode on this on the Finance Junkies podcast, 1788 pre-market. Snowflake 176. Let's go to Palantir. I think Palantir is up in the pre-markets. Yeah, Palantir's up about 1% at 1548. But overall, the story of the morning is Tesla and just the phenomenal job that Tesla's done. Palantir Research, good morning. Jeremy, good morning. Joshua, I think Tesla reports in 2 weeks. Okay, cool. Tesla will be reporting in about 2 weeks, and we will see from there. No Monday-itis for Tesla. Yeah, that's true. No actual Monday-itis for Tesla. I think the other, unique thing about the Tesla story is that as we're seeing a lot of the companies, what do you want to call them? Other manufacturers consolidate into the charging protocol that Tesla has created. It's kind of solidifying what Tesla's trying to do. Not only are they selling the most vehicles, and they're selling the vehicles at the most profitable rate out of all the other auto manufacturers, but they're doing it in a way that is forcing every other car manufacturer to adopt their charging standard. de facto forcing them to be the thing that gets paid from, or the company that gets paid from everyone who uses EV charging in the future, which in the next couple of years is going to pay massive dividends. I think Rivian delivered 12,000 vehicles. That was the news today. So Rivian right now is up 7% as well. So you deliver 12,000 vehicles. The market gives you a little bit of momentum. So we're seeing Rivian here at 7.68%. But obviously Tesla is the story of the day now at 276. Apple at 193. Apple is now a $3.05 trillion company. The market has not sold off Apple. I mean, it's barely down in the pre-markets. And we'll see as it opens up on Monday. But the interesting thing as we discuss the bull, the bears, and what's going to happen or not, I'm increasingly convinced that if Apple maintains a $3 trillion valuation and the people on the street who are bullish are starting to be a little bit more right than wrong, then 2023 is going to be an end of the year rally and 2024 is going to be amazing. And the catalysts are simple. Inflation comes down, which means interest rates either pause or they go down. If they pause for the rest of the year, it's amazing. Even if they hike once for the rest of the year, it's amazing because that hike is just going to cause extra QT, which is going to lead to better results on inflation. That's going to be important. Student loans are coming back, which means less money is going to go into the economy. That's going to be good for inflation. By the way, we have to talk about student loans. And the third thing is that Q2 earnings and Q3 earnings, every analyst that I'm listening to says they're actually going to be good. And my original thought was that Q2 earnings are going to be bad. It seems like earnings are not going to be horrible. And if they don't crap the bed, then this market's primed to take off. And we will actually have a soft landing with an unemployment rising slightly, but not enough to the point that it leads to some catastrophic recession. Now, I could all be wrong. And we have, another 2008 type of scenario, but the thing that was supposed to happen, like Silicon Valley Bank and all that's, like, it all happened. All those 2022 equities fell by 80%. It happened. A lot of this stuff happened. And fortunately, the S&P went rather unscathed. I mean, it went down to $340, but and it stayed there for a little bit. But besides that, it was not a recession that was necessarily as intense as we thought it would be. But it did happen. And so if it happened, one could argue that we're moving forward from here. Rivian produced less cars than Tesla, beat delivery expectations. Yeah, I mean, well, the market's going to give them a little bit of love for that. Bike Pimp, good morning. All right, we are 2 weeks away. Q2, 2 weeks, 2 minutes away from the morning open. Q2 earnings are going to be decent. Yeah, I think so. I think that's going to have an effect on the market. Today, the market ends at 1 p.m. Eastern. So the market will close at 1 o'clock Eastern Standard Time. And tomorrow, the markets are closed. So tomorrow, unfortunately, there will be no live stream. No purpose in my life, but that's okay because I guess we have to celebrate American freedom. I'm increasingly getting annoyed by all these holidays. I mean, look, I respect the holidays, but keep the markets open, man. Don't close the markets on the holidays. I don't have a family that I'm out here celebrating with, so I need the market to be open. But America has to do what America has to do. So markets will be closed tomorrow. They'll be closed at 1 p.m. Eastern today. I thought, some random idea I had was that the markets might sell off today because they don't want to hold through the day through July 4th, given anything could happen, kind of like a weekend argument. But the Tesla catalyst seems to be carrying the market nicely. And a lot of stocks are benefiting from that. S&P 500 also at 442.91, so down just a little bit pre-market, not down enough for it to be a big concern. So we will see where it goes. Tesla, all eyes on Tesla. We got 30 seconds, and now we are going to see what happens to good old Tesla and how it keeps going from there. Crypto market never closes. That is also true. I mean, you're young. You'll learn to appreciate the holidays. I appreciate them. I just don't close the markets. I need my markets. All right, here we go. We got 5, 4, 3, 2, 1. The stock market the day before July 4th is open. Wake your ass up. Tesla at 276.94, 277 now, up 5.84%. So Tesla is not selling off into the market open. Tesla is going up. Palantir, $15.42. It is also up. Rivian is up. S&P 500 at 442. Sofi at 836. Enphase 169, up just a little bit. Robinhood at 999, so just down a little bit from pre-markets. Bitcoin 30,620. Innovix $18.08. Apple 193.67, maintaining their $3 trillion valuation. Nikola is up 4.3%. So I guess a rising tide lifts all boats. So Nikola is up with Tesla. Nvidia 426. Look at that. Nvidia right back. to close. I mean, it's not at the top at 439, but it's getting close there at 430. So Nvidia is up. Snowflake at 176. Google, interesting that Google's down. Again, it's really interesting that Google is down almost every time we've had a green day. I mean, the highest I think Google got to was like 122. Like, if you just look at the chart over the past couple of months, Google's just stuck in that 122 range. So I guess Google now at 120. I think the market's having a really interesting reaction to Google, and I want to dive deeper into what they're thinking about. But Google at 120, Unity at 433, at 400, at 43, Roblox at 40. Space. It has been announced that it will cost $450,000 to go into space on the Virgin Galactic rockets. It is down 2% at $3.77. Teladoc at $25. Shopify 64, Zoom at 67, Roku 64, Amazon 131, breaking the 130. So Amazon's doing nicely there. Look at the NASDAQ, 13,812. We have not cracked 14,000. The top in 2023 was 13,864. So we're about 40 points away from cracking the top, at least in 2023. But we have not cracked 14K. Open Door at $4, TFC at $30.83. Adobe at $4.84, PayPal 67, Square 66. Pretty much a green market for most stocks. There's a little bit of red here and there. Look at Coinbase 74, ARK 45, GM is up, Qs are up, even the triple QQQs are up. Things are pretty much up, nothing too crazy. And the sell-off on Tesla has not happened. Tesla's still at 278, opens up very nicely, up 6.4%. They have not sold off yet. Not bad. Not bad. The market's up. The market is up. Should be a light trading morning. Have to wait until Wednesday. Yep, I agree. Tesla is trading more expensive than Nvidia on 2024 earnings expectations. Be careful buying Tesla here. Yeah, I definitely want to be a buyer of Tesla here. So if anyone, is interested in averaging up or initiating a position, I wouldn't buy here. Now, granted, 2030, if that's your timeline, then yeah, there's not a real difference between 279 and 250. But this is momentum that's meant to be. There are certain days that are meant to be enjoyed by longs and not meant to be chased by people trying to get into a position. It's just the truth, right? Like at Palantir buying at $16, the people who are supposed to enjoy that are those that are bought it at 11, 10, 7, 8, right? You're supposed to sit back and enjoy and let, honestly, FOMO carry the price even higher, and you sit back and you just enjoy. I think same thing with Tesla. I mean, if you have a Tesla position, you should be enjoying this. If you don't have a Tesla position, I do not think you should be buying this, especially on a day that's green. Like there's just no rush or reason to buy on a day that's this green. You can wait for a little bit of a pullback and have a little bit of a better entry. But nonetheless, Tesla is having a phenomenal day. $883 billion is the market cap. They are $16 billion away from being a $900 billion company, which I think would be around $300. $300, that's when they get to the 900s. RSI right now on the daily at 91. So one could argue it is a little bit overbought, but that's what it is for Tesla. Let's look at Nvidia. I think Nvidia is at 80 on the RSI on the daily. 73. So yeah, Nvidia is theoretically still cheaper, even if you look at the RSI from a technical perspective, than Tesla right now. LOL for a minute. No day is a good day to buy Tesla. Again, for me, it's about the lack of capital. It's not really about not wanting to buy Tesla. I'm very bullish on Tesla. Also, I liked what Elon did today or over the weekend. I don't know if you guys saw what he did on Twitter, but he did something where he was like, you have to pay to view the tweets, and there's only a certain number of tweets you can view. And I actually liked it. I thought it was kind of innovative in terms of what he was doing in social. I think Elon's just a rock star. He's been a killer. Tesla's a little expensive right now, but it deserves the valuation. So when I mean it's expensive, I mean for a new buyer. But does it deserve to be $900 billion? I think 100%, given their growth rate. You can't argue with a company that's growing 50% year over year. You just can't do it. None of these other audio manufacturers are growing 50% year over year. And if they're growing that much, then that's why it deserves a rundown. Okay, let's take a look at this. Let's take a look at this. Let's take a little bit of a look at where we think the market are all heading. This might be a little bit bearish or bullish, but let's get a look on that, and then we'll get back into some of the equities. Another bad day to get Tesla at like 100. Well, no, Tesla at 100 was great, Vitaly. Just like Palantir at 6 was great. So I don't know what your point is there. Tesla at 100 is just as good as Palantir at 6. So for those that didn't get Tesla at 100, I could say the same as those who didn't get Palantir at 6.
44.50. Mike, with Katie Stockton. She does technicals, Fairlead Strategies founder and managing partner and a CNBC contributor. We talked in the past about how technical analysis works, Katie, and it is trend following. So I don't expect you to know everything. And it also, I think there's times when it's probabilities. So when we were at 4,000 and we're trying to figure out whether we're going back to 4,200, we're looking at the 3,800, 4,200 trading range we were in. You thought we'd stay in that range, but it was the probability that you were talking about. What was the probability you saw at that time that we'd get to 4,450? Must have been less than 10%.
You know, when we got the breakout, that's what changed things. So if you recall, in mid-May, we had the breakout above that 4155
4155, but at 4,000, we had you certainly did not think that
we were working under the assumption that that range would hold.
Yes.
And of course, it did not. And really, like, your point's very good in that we're always just trying to put odds in our favor. Nobody knows what's going to, be the next month or the next year even.
Right.
But we're trying to make sure that we have momentum gauges on our side, relative strength on our side. We want to make sure there's no big overbought sell signals. So that's our charge. We want to make sure that we have those things supporting the market. And when we do, we're bullish. When we don't, we shift back to a bearish bias.
So what are you seeing at 4,450? What's left? Is anything left?
So the breakout did yield an objective of about 4,510. That's also aligned with the resistance level from the Fibonacci retracements. So that would be a natural place for a pullback to unfold more than what we've already seen. And yet, as long as the momentum is there, and as long as we don't have any big overbought sell signals, which we don't at this time, we want to stay with the bullish bias until it proves us otherwise, until we see that loss of momentum, because I think that this market is probably a very long-term trading range. If you look at the monthly gauges, you'll see that they tend to flatten out when you look forward a couple of years. So to me, within that context, we have to have an intermediate-term focus on momentum. And when we don't have that intermediate-term momentum benefiting the market, we want to be managing risk, of course.
Should we look at the NASDAQ differently than the S&P? It fell a lot more. It's rebounded a lot more, but
that is true. NASDAQ fell from 16,000 to 13,000, whereas S&P to 478 to 430.
It also fell a lot more. Is it the same? We're seeing basically the same thing if you just sort of average things out in terms of going down versus coming back. Is it the same phenomenon we're seeing, or is there something different, even stronger about the
momentum there is the same. They obviously maintain a very high correlation between the NASDAQ 100, the S&P 500. It has a better opportunity to go to new highs. It does have leadership still from the mega caps. We just saw Apple break out to new all-time highs. I don't know why nobody seems to be talking about that. That's a big deal. The more breakouts that we see from a bottom-up perspective, mega caps or aside, that's a bullish development because it tends to allow breadth to improve further. And breadth has improved, to Mike's point.
All right. So, I mean, look, she's correct on that argument. The NASDAQ and the S&P have traded relatively similar, especially with Apple, right? When Apple goes up, the S&P tends to go up along with the NASDAQ. Now, one thing I want to talk about here is SoFi. A lot of people are asking, why is SoFi not going up on some of the student loan news? And the reason for this, and we were covering this live on Friday, me and Tanner, student loans obviously were not forgiven, right? So what happened is this conservative court 6-3 voted against it. The sort of core argument was that, personal responsibility, you can't force some random person to pay for your loans, and more of the technical side, they said that the president doesn't have the authority to do this through executive order, that Congress has to pass a bill like this. And they even cited Nancy Pelosi at a press conference in 2021, who said word for word verbatim, the president of the United States does not have the capability to forgive any types of loans. So they kind of used, this administration's words against them. So SoFi tanked originally, and then it started coming back to the top, but then it got sold off. It went from like 920 back down to 830. And I think the market really just sold off the news. I mean, the one thing that the market understood was that this was baked into SoFi a long time ago, that student loans were coming back. I mean, no one thought Clarence Thomas or Samuel Alito or Neil Gorsuch were going to vote for student loans good, right? Forgiveness good. They weren't going to do that. So I think the market kind of already priced it in, so it got sold off a little bit. Regardless, even if the market had approved student loans, a lot of the people that borrow from SoFi or refinance with SoFi aren't eligible to get the $10,000 reduction, because that goes for, people making $125,000 or less. SoFi targets more upper class people, rich, very nice FICO scores. So it wasn't really going to have a massive impact. What I think is going to have an impact is that it's going to add $40 million to adjusted EBITDA per quarter, 40 to 80 million for SoFi, which is going to be insane. It's gonna be pretty insane. And I think that's gonna help us get to GAAP profitability by Q3, if not Q2. Probably not gonna happen Q2, but Q3 that's gonna happen. And as a result, SoFi is gonna benefit from it massively. It's just right now you're not seeing it. So I think this is actually a dip that's decent on SoFi. Could it go lower? Sure. But if it was at 9, I would not say that would be a nice buy. But because it got sold off on that, it actually means it has a little bit more room to run. And if this isn't the worst time, I think, to start a DCA. Again, at $10, SoFi starting a DCA, probably not the best. At $8.30, I think it's reasonable. And we just have to kind of see where it goes from there. But that student loan thing is real, man. It's going to add millions to adjusted EBITDA every single quarter, which is like, and they didn't account for that this year. They guided in January with no student loans coming back because they just expected it just wouldn't come back, and it's coming back, and it's going to come back really big. In the context of SoFi. Look at Enovix nearing into the $19 range now, $18.77, up 4%. We did a deep dive on this company. Look, I'm getting a little bit more bullish on the battery field overall. Still don't have a major position in Enovix, but maybe we'll start dibbling in a little bit more into the company. It is a massive speculative play, so it could go to 0 as much as it could go to 200. But we did do a podcast on that for anyone who's interested in learn a little bit more. And NASDAQ now at 13,820. So 2023 getting close to those all-time highs. Open door at $4. TFC at 30.96, almost breaking $31. S&P 443 flat from Friday. S&P is not going down. S&P is continuing to rally and stay and have momentum. Many owe $100,000. Yes, my TFC leaps are up 15%. Josh, you got those TFC options on a good day when it was down. TFC earnings are going to be good too, because even if they're going to show some declining in growth, their overall profitability and their balance sheet is stable, right? And that's all the market needs. Again, $45 is their fair value. The market just needs to see them have the balance sheet that is not a Silicon Valley bank, that is not an FRC, which is the only reason the market collapsed them. As long as they show that for the next 2 quarters, they're going to get back there. And, it'll be very easy for them to continue to keep going. When is Hood moving? Hood is ready to break out. It's going to happen. I don't know when, but I mean, they're 3 cents away from GAAP profitability. They show that nice little GAAP profitability, little Michael J. They show that GAAP profitability number. They're going to do well. They're going to do very well next quarter. Also, you got to remember my thesis for Hood is that they have $6 billion in cash, $8 billion of market cap. And in a bull market, MAUs are going to go through the roof, monthly active users, and they're going to do a crap ton of trading. That is going to take a couple quarters to manifest itself. But when Tesla goes to 340 and all the people that didn't get in are going to FOMO in, like I would have had 5 years ago, right? Those newbie investors, we need them coming back to Robinhood, and they're going to start buying a crap ton of stocks, and Robinhood's revenues are going to go up. And if interest rates stay high, their net interest income is also going to go up. So as interest rates go down, stocks go up and Robinhood gets momentum. If interest rates stay high, the net interest income that they have, which is exploding, is going to continue to go up, and they're going to win either way. The question is, when is this bull market really going to happen for Robinhood to have the momentum? And I think in the next couple quarters, we'll see that, if not 2024. Along with the fact that they're getting profitable. They're getting profitable, which is the most important thing. Don't forget the crypto bull run. Yep, that is also true. The crypto bull run will have, I'm not super bullish on crypto. You guys know, like, I don't own any crypto, but that doesn't mean I don't think a bull run is going to happen. That just means I don't want to own it, right? So I absolutely do think Bitcoin will rally. And, is 61,000, whatever the high was last time, possible? Absolutely. I just personally can't, reconcile myself owning this asset, and I'm not going to have any FOMO as it gets there, because I just don't care, right? Like, I really don't give a shit. Like, if you want to make money on Bitcoin, that's fine. I personally, as an investor, cannot stomach with the amount of capital I have own. And I don't, it's not interesting to me. Like, if I don't own any of Bitcoin, like, think about it. Let's say I buy half of Bitcoin right here, which I don't even have 15,000 to buy half of Bitcoin, right? Whatever fractional amount of Bitcoin I buy and it goes up, unless I buy a full coin, I can't get the 2x, right? Which is like, you would imagine if you're in crypto, you're not playing in crypto for 10%, 15%, right? You can get that in a lot of other stocks that are incredibly less risky than Bitcoin. If you're in Bitcoin and you're not buying an entire Bitcoin, why are you in Bitcoin? Like, or you're not DCing into a position that's already healthy. Like what, for 10%, 15%, 20%, 30%, or what? You get 100% off like $1,000 that you put into Bitcoin. Is that really worth it? So to me, the price is already so high if you're not buying entire coins, and maybe that's the wrong ideology to think of it, but I just don't see the risk reward upside if you don't have coins, but if you have parts of coins, which is why the small cryptos went so crazy because everyone realized they couldn't get into Bitcoin. So they started buying Solana, Cardano, or Doge, or all this other stuff. But those are getting taken off from all the exchanges as per the SEC and as per like the fact that a lot of these ended up just being shitcoins. So I just have zero FOMO about Bitcoin. Like zero FOMO. Just it does not affect me at all. Palantir at $15.32, down just a little bit from $15.40. Tesla, $282. So I was wrong. I thought at 300 it would be a $900 billion market cap. It's at 897 billion. So it needs probably like 898. It needs like $2 more, and I think it gets to 900 billion. So it will be at a 900 billion at like what, 285. Let's just see if it gets there. It's continuing to go. You would imagine at 285, 286, and then this rallies into 300 into earnings. That is very, very possible to happen for Tesla. Amit is struggling with the crypto. No, I think the argument actually makes a lot of sense. If you don't have, that makes no sense. How much you own doesn't change the percentage you make. Yeah, but it makes sense if you take into the account the risk reward upside. Meaning, if I'm looking for 100% gain in Bitcoin and I only put $1,000 into it, why would I risk $1,000 into something as volatile as Bitcoin to get 100% gain? Whereas I could put it in a company that has a lot more legroom. It's a lot more undervalued. Like you could argue for all the metrics. I can actually see the financial. Like for me, if you're betting on Bitcoin, you're betting on an abstract thesis that the world is going to switch to some decentralized currency, which is fine. But it's a much more riskier bet than investing in something like a Tesla, right? Or even something like a Palantir. I think it's incredibly more risky than investing in one of those companies. So my point is like, yes, the percentage gain might be the same, but at what risk are you looking to get it? The risk reward becomes reasonable to me when you actually own a crap ton of Bitcoin, because then if it goes crazy, you have a lot of money to be making off that. But if you have a little bit of money, it just doesn't make sense to even have the allocation in my portfolio. At least to me, that's not the unique allocation. That's not a unique reason. Bitcoin has been less volatile than the S&P and Palantir. Sure, but the S&P and Palantir are actually, they host companies inside of them, right? This is the thing I'll just never get, bro. Like Palantir, there's a balance sheet. There's $3 billion in cash. I can calculate a book value. Bitcoin, you can't really do the same. It's not the most interesting thing for me. And if you 10x, but 10x means Bitcoin has to go to $300,000. That's my point. Like, if you believe that's the case, then okay, sure. But the odds that Bitcoin goes to 300,000 in this next bull rally, I'll take the under on that. I don't think that's happening. I don't think that's happening. I just don't think that's happening. Hood does have some nice catalyst gap around the corner, launching credit card soon. 1% IRA are doing well. 24/5 trading is working well. Cutting with the fat layoffs. Yeah, Hood is set up. See, like Hood, you can look at all these catalysts and be like, if I put $1,000 into Robinhood, I can see the potential of it going up. Whereas I just dump 1,000 into Bitcoin and I hope for it to go to the moon. To me, that's not a strategy for investing at all. Like that's why I think the people that benefit off Bitcoin are the people that got in early. And I'm very happy for you, because now you just have to watch retail dump in like a bunch of apes and monkeys trying to get something to go up, and you just sit back and enjoy. Whereas a company like Robinhood, you can actually make a real bull case for it and have a catalyst and sleep well at night knowing this is a company that has users, that is operating, that has, potential net income coming around the corner. I just don't feel the same with Bitcoin at all. What would it take for Bitcoin to break 69,000? See, this is the comment. Vitali said publicly on the podcast, he's been in Bitcoin for a while now. He was mining this shit in 2012. So when he says, I'm trying to offload on you, this right here is the comment. And I love that he said this, by the way, because I respect that he said this. And I've always respected Vitali because he's been honest about it. Carlos is on some whole anarchist, we need free money bullshit. I'm like, look, honestly, whatever, Carlos, you can, that's fine. Vitali's saying the truth. He's trying to offload his fucking Bitcoin on the next, generation of bag holders. These are the types of people that are going to sell when this bad boy gets to 60 grand, 70 grand, 80 grand, and you're going to be left holding the bag. And see, I just don't want to be that type of person. I don't want to be it. Not the right mentality to me. Okay, let's address this comment because a lot of you guys think this comment too much. Amit makes the same mistake over and over. He said the same thing with buying Tesla at 180 too high. I'll buy if it dips to 150. That is incorrect, Dejuki, and I can show my Robinhood to disprove it. I was buying Tesla at 180. I was buying. I can literally pull up the receipts to show you. I did not say this. The reason you guys think I said this is because I sold out of my Tesla. But the reason I sold out of my Tesla is because I put that capital in a place that has generated much better returns than Tesla so far. And I already said where those returns were. They were options on a regional bank. I was buying at 188, at 178. I even bought at 165. I have these buys. I can, if you don't believe me, I can post it. But I mean, like, I'm telling the truth. I bought these. I sold it at around 170 because I needed capital for a different allocation. So it's just simple to me. It's just a question of capital allocation. Where do you think your capital deserves to go? And at that moment, I didn't see my capital staying with Tesla. Now, Tesla ran up 100% in a month. That's great. I've got some options that have done really well, even far better than Tesla. And I'm a lot happier with those options because the potential for those options to go higher versus Tesla to get to 650 by, January 2025, the probability is just lower on Tesla getting there versus those options. And so that's the difference. It's just a question of where you want capital allocation. And I will be, you guys can say whatever you want about selling Tesla. In 2025, we will compare results and I will be very happy with whatever decision I made because I care about cash. I don't care about being ideologically inside of some cult just for the hell of it. And that's, that's the case. And granted, I like that Tesla is a cult. That means the stock has more potential to run. But at the end of the day, Tesla has to show a lot of results to be a 4 or 5x by 2025. Will it 4 or 5x from here? Absolutely. Will it happen in a year and a half? I don't know. I think that's a little hard to imagine. Remember, the top for Tesla was 400. You got to remember that. And then it got sold off at $1 trillion. So it has to break that. And could it break that? Yes. Does it break that in a year and a half? I don't know. That's the harder part to imagine. Whereas the options I have on a company for it to just go back to a value that it was at for 6 years before it collapsed for no reason other than Silicon Valley Bank, it's a little bit more likely to me. And maybe I'll be wrong, but the point is I think that risk reward is way better than betting on Tesla. At least at this age, right? If I was 40 years old, I wouldn't do this. But at 25, where I'm trying to generate cash as quick as possible, that is my logic here. Like Enphase, but why so bullish? Solar penetration is 3% around the world. Enphase makes the crucial microinverter that goes underneath solar panels. So the growth opportunity for Enphase is massive. That is the Enphase bull case. Great point, Amit. Virtue signaling on money don't mix. Yeah. I'm not going to be like, oh, I love Tesla just because a lot of people love Tesla. Like, the reason I love Palantir so much is because of the due diligence I've done, right? And like, I'm really excited for the due diligence. I'm really excited for the growth prospects of the company. I've done a crap ton of due diligence on Tesla, and I love Tesla as well, but I'm getting Palantir at a $30 billion market cap, and I was buying it when it was a $9 billion market cap. And I'm getting Tesla at an $800 billion market cap. Now, I had the opportunity to buy at a $300 billion market cap, and that's where I made a mistake. But I don't think I'm alone on that. I think a lot of people, including a lot of Tesla bulls, didn't buy at $100. And like, yeah, those were mistakes that were made. It happens. I'm not going to get every opportunity in the world. And that's a learning lesson. But now I'm not going to be super excited to buy it at $900 billion. I'm just not. Again, I don't disagree with the valuation. I just don't like me buying at this valuation. And that's the difference, because it's a question of how far it can grow. And that's it. It's a very simple argument. TTCF has gone bankrupt. Yes, that is correct. TTCF has gone bankrupt. So this was a Jeremy stock. It is officially filed for Chapter 11 bankruptcy. Tough day, man. Tough day for the chef. This is a company I know Jeremy loved a lot. Look, it happens. Some of these speculative growth names. And by the way, this could happen to Enovix. I don't think it will happen to Enovix at all, but it could, right? And the guy who invested a lot of money, who was on our podcast yesterday, said the exact same thing. This could happen to Enovix. When you're doing these speculative growth names, anything could happen. So, like, now the probability is a little bit lower, but could it happen? Yes. And it's something you have to be prepared for. So, I don't think there's a lot of shit to give to Jeremy, because at the end of the day, I didn't believe in this thesis that the world was going vegan. I know that was his overarching thesis, but that doesn't mean that, the company didn't have a chance to go bankrupt, and it ended up happening. It is what it is. So kind of got to deal with how it ended up playing out. All right, let's see what else we have going here. TTCF is garbage. Yeah, I mean, look, I didn't. whenever I listened to his thesis in 2021, I wouldn't say it's garbage. I just wouldn't agree with the thesis. The thesis was this whole, vegan revolution. I was like, I don't think this is going to happen. It's not that interesting to me. All right. We got Dan Ives giving us some Tesla. Listen to him talk about Tesla. He has been very bullish Tesla for a long time. Let's hear his thoughts.
Dan Ives, of course, of Wedbush Securities, a frequent guest for that seat right there. Love the green pants.
Thank you.
Sorry we can't get those fully on camera. But let's start off with what you've been talking about. You've been very bullish on Tesla. You've been right, Dan. What do you make of the deliveries?
I think this was it was a jaw dropper relative to many expecting softness. I think those price cuts, that was the poker move that they really needed to make to put an iron fence around their install base. China, I think that's really ultimately the catalyst. And this for the bulls, I think this is really an inflection point. It feels like right now they're just getting stronger. And in terms of electric vehicles, it's Tesla's world. Everyone else paying rent.
But, the point Mike and Phil both made is we're still really at 1.8 million for the year, which is where we started. Estimates for the company have actually come down. So has this actually been the reason the stock has added, or the company's added 400 billion in market cap? And if not, what then? And is it justified?
Yeah, and obviously great points that they make. But I think what this has really been, it's about the AWS moment, the supercharger. That's really what changed everything. In terms, I think investors now are starting to realize the sum of the parts of this story is starting to get realized. And even the next quarter or two, margins will trough out in terms of, I think ultimately expand to Q4 in next year. But the supercharger, batteries, and of course AI. I think right now, not given credit from an AI perspective, which is why now you can maybe start to rationalize, is this $1.5 trillion or higher? As this all plays out in terms of the Tesla story.
Well, I guess we should mention it did trade at 1.2 trillion once. It went from 1.2 to 400 billion. So it lost 800 billion. It's regained half of it, essentially, over the last couple of years. But again, I keep coming back to this idea. If it is this huge open-ended, AI play, they're going to be the mobility utility for the world, and it's a software company, great. Why should I care about $10,000 upside for units in a quarter? If that's the context, then why are we trading 6% higher on a roughly as expected number? And you say bears should be going into hibernation. I don't think they are. Bernstein here, $150 price target. We struggle to justify the rally in fundamental terms. The clearest sentiment catalysts have been market perception of Tesla as an AI company, as well as Tesla's charging standard becoming a de facto standard in North America. Neither appear financially material to Tesla.
Look, for the bears, they hate it at 20 billion, 50 billion, 100 billion, and where it is today. They're always going to have that view. My view is this is just a transformational growth company. It obviously went through issue in terms of the price war, but now that ultimately they're playing chess, others are playing checkers. It's paid off. Margins are troughing, and investors now are starting to realize that dream scenario as they get through to 2 million units, to 3. Cybertruck comes out later this year, and then that sum of the parts. That's why right now this is just another flex the muscles moment for the bulls. But the bears, they'll continue to yell fire in a crowded theater.
But to Mike's point, when does that actually trickle down to the fundamentals? Because if you use kind of that AWS example, perhaps when you can really monetize the supercharger, the AI, and all of that, you can keep those prices low and keep volume churning. Is that ultimately kind of what your calculus is? And if so, when do they get there?
And it's a great question. I think the other thing is that from a battery perspective, they now could potentially lower costs over the coming years, 30 to 50%. You start to factor that through. That's where ultimately, then there's the drum roll to a sub $30,000 vehicle. That's where demand really starts to expand. And this green tidal wave, this $5 trillion green tidal wave that we call that's playing out, it's not just zero-sum game. GM, Ford, others, Rivian, 313 area code, it's going to be successful doing it. Biggest transformation to the auto industry since 1950s. But this was the quarter. The bears were saying, this is it. They're going to miss the quarter. And ultimately, they go into July 4th with fireworks, as I believe this was an inflection quarter.
I think he's absolutely correct on that. The argument he made about batteries is also a really good point. Tesla has the ability to reduce the cost of a lot of these cars that they create as they scale the battery production and as they get batteries to be even cheaper than they are right now. A lot of times you need economies of scale for anything to become cheaper. And as batteries become more cheaper, that's going to be important. Fun fact, one of the companies that creates batteries for Tesla, Panasonic, is partnered with Palantir. So that's a very interesting thing. And overall, I think he's overall correct. Dan Ives, I know a lot of people don't like him as an analyst. I actually love him as an analyst. No, it's not because he's wearing a pink shirt and I'm wearing a pink shirt, but it's more so because of the fact that he is bullish on technology, and he's bullish on technology for reasons that aren't ideological or abstract. I mean, to me, by the way, when the bear market was in 2022, he lowered his Tesla price target. I mean, I think he lowered it, got to the lowest of like 235 or something, Wedbush. This is when he was buying Twitter and there was all this nonsense going on. And all this stuff happened, right? So it's not like he's just like, no, Tesla to 500, even when, things obviously aren't going well. He is a Wall Street dude. At the end of the day, they react on short-term price targets. But he continuously has a long-term view of the world that keeps him bullish. And I think his thesis is very similar to Kathy's, except he's picking better stocks than Kathy, which is that this is 1995, not 1999. And these are real companies that have real business models that are doing real things, that are just at the precipice of what they're able to do versus a dot-com bubble. Now, Kathy believes in the same thesis for what's going on in 2023, but the problem is Kathy Wood has picked Roku, Zoom, and Teladoc and Coinbase to be the overarching winners, whereas Dan is like Tesla, Microsoft, Google, Amazon, Facebook, right? He's picked big tech with Tesla and Nvidia to be the winners. Kathy has picked the sort of disruptive, innovative, more smaller capital companies, smaller market cap companies to be the overall winners. I disagree with Kathy on that. I don't think Roku is going to do better than Microsoft. I think Microsoft's going to do better. And I think it's very easy as an analyst to say, hey, Microsoft's going to do better. Look at everything they're doing, which is why it's not that hard to be wrong. It's actually very, very simple. He follows the trend. Stock goes down, he lowers. Stock go up, he raises. And that's why I think he's actually a good analyst. Because at the end of the day, you can't take the Wall Street out of him, right? He's on the street. And he's going to be analyzing it the way the stock goes up and down. I think the only way you get someone who continues to maintain momentum as the stock goes down is someone like a Farzad on YouTube, someone like a Stephen Mark Ryan, someone who's just like so obsessed with the story. This is the only stock they cover. At the end of the day, Dan Ives, he can't say confidently it's a $375 stock when it's $100, because that's just not how the street works. You cannot have a price target like that. I mean, no investor will invest in your fund if you don't have reasonable targets, which is why they're also short-minded. But out of all the short-minded people on the street, which is all of them, including Gary Black, to me, he is the most long-term minded and sees the bull case over the long term. So you can't change a suit, but a suit can be hopefully as better as he's one of the best suits that I think exists when it comes to analyzing Tesla. And so that's the case. I may get into Tesla. I will get into Tesla eventually. I'll be in there. Look, I could buy a share right now for people to be happy, but if I get into Tesla, I want an actual position, and I don't have the capital to have an actual position, and that's just the truth of it. And so if that's the case, that's the case. And we'll see, eventually I will get in there, and I'll let you guys know when I'm in there, but I'll be there. Dan Ives says the same thing every time. No, I disagree. Well, you got to remember the clips when Tesla was at $100 on CNBC. He was not saying the same stuff. He was not saying it was Tesla's AWS. He was speaking badly about Tesla. I mean, I think he goes back and forth, but overall he maintains to have a bull case. I mean, even when he lowered his price targets, I remember him articulating his bull case, but he was cautious in the short term, which is kind of how these Wall Street guys are. All right. I think that's it. Adam says these analysts are glorified YouTubers. Shock and awe, ride the wave. 99% of them, and YouTubers do not go against the grain. Where were the YouTubers praising Palantir when it was $6? That is true. That is true. It's hard to cover a company and be in it when it was really low and really high. And I think you get the benefit if you were covering it when it was really low. There weren't a lot of people talking about Palantir when it was $6. I mean, obviously I was there. Adam was there. And then I'm like, I honestly, if you guys know who was there, who was actually making videos every day about it, because I don't really know that many people that were there. But it's just, and because Palantir had my conviction, and so I kept doing due diligence, and it was exciting. And that to me is what really marks an analyst. Can you be excited about it when shit goes south? Because that's where the arbitrage is. That's where the opportunity is. And a lot of people do that for Tesla, right? Rob Maurer, Stephen Mark Ryan back in 2018, 2017. These were the guys who were pounding the alarm, even though it was dipping. And that's why they get to benefit now that it's up here. All right. Any news on getting Tom Lee? Yeah, so I reached out to his folks. Still no hearing back from them. So hopefully we hear back soon. Tom Lee is down to come on the live stream. It'll be super fun to get him. So yeah, I will let you guys know as soon as possible. Hopefully this week, we'll see if we can get Tom Lee. That'll be big for the live stream. And so we'll see if we can get him on the show. It'll be super fun. All right, that's it for me. Thank you all for being here. 445 people. I appreciate it. Hope you have a great Monday. The market's going to close in a couple of hours. Tesla right now, 281. Robinhood at $10.18, doing pretty nicely. S&P at 443. Palantir at 1533. Sofi at 848. So not too bad for these companies. I will not be here tomorrow because there is no market open. So I will get a day off. Even though I don't like having a day off, I like working. But I'll be back the next day. A couple more videos coming on Palantir today. Finance Junkies will still be live at 10 p.m. Eastern today. We'll be talking about Tesla, their deliveries, and all the other good stuff. And we'll keep going from there. Thank you, everybody. I appreciate it. Twitter in the description. Please follow on Twitter. I'll see you guys later tonight. Good night. Have a great day. Oh, and enjoy July 4th. Bye-bye.